Welcome back to the episode of my trading vlog, where most of the views come from returning subscribers. If that's you, please hit the like button. If not, consider subscribing. I'm going to take you through some mind-blowing analysis today on AMC. Of course, we have to do all the analysis all over again because all the price ranges have changed because of the split. Let's just open up the charts, have a look. You're going to see AMC on the daily time frame without the candles. Take away the green, take away the red, get rid of that bias. It's bullshit. After all, most of the indicators that you look at are based on the close of the day and not the intraday swings. After all, the infamous OBV, on-balance volume, is also taken based on the close of the day. If the close of the day is above the close of the prior day, all volume, including short volume, will be added to the OBV. So you get a big tall green day and just a massive amount of short interest right there at the very tippy top, and the close comes in higher than the previous day's close. All that short volume gets added to the OBV, and the OBV is pushed higher. OBV is broken. I don't want to talk about it. So we have A, B, and C here coming up from January of 2021. We know now that this is obviously an A, B, and C push, just a corrective mode, even though it made progress. And that's because of wave C. This wave is the terror of every trader, I think, if you're not aware of Elliott wave. What happens is that you get this incredible surge in the price, and you just think that it's going to go to the moon, and that was me too. And then it doesn't. It reverses. What we have is what's called a combination 3-3-5 through here. And the first three actually happens, it starts way back in 2016 with a big push, A, B, and then we get C. And this ends with a massive double bottom through here. We pushed up into A. We had a flat. This wasn't truly a triangle. A lot of people, including myself at the time, were drawing this as a triangle like this. I guess you could do that because you do get a horizontal triangle in wave B. I didn't like the touch points though. Didn't feel like we had enough touch points. And after all, it seems like the price would have broken out in both directions before making a meaningful move. So it's like, okay, you've got the general idea, but I don't know if it's like totally right. And then we had this massive surge, big motive push up for wave C. What happens then? Well, price starts to reverse, and this is where it gets interesting. I've been supposing for a while now that the meme stocks are stuck in corrective trends. There isn't a real motive trend through here. And even this, what I'm going to show you is a motive wave, is still part of a corrective phase, what we call a combination 3-3-5. So we had that first three that ended in 2021. The next three gave us that big push up to $72 or $625.50 now. And since then, we've been in the last set of waves of that combination pattern, which is a set of 5. And before, just recently, this big push down, I had supposed that the push from that high to the low in about January of 2022 was A. It could have been A, B, and C, and we'd be looking for reversal. We formed a descending triangle through here, which to me didn't really say that we were going to have reversal. We got an upward breakout, price turnaround, and fell. This makes sense if you use Elliott wave analysis. When you get a triangle, it's very common that you get points A, B, C, D, and this E wave overthrows the pattern. It breaks out, and then it reverses, and progress continues on the incoming trend. So this was a downtrend coming into this thing. We got the overthrow, and then we didn't get a trend confirmation through here. We would have to set a new high above this point E, and it didn't happen. In a reversal pattern, what you're going to see is a zigzag. It's going to be one up. You're going to come down. You're going to test whatever the breakout level was, the pattern. And then you got to break that new high. You have to get above that point right there. If you don't, guess what? You're probably going to get wrecked. There's no point in entering early. That has been one of the hardest lessons I have learned as a trader. There is no point in getting in early. Do not worry about being late. Be grateful to catch even just a small part of any motive wave that you can and humbly accept your gains. Being greedy is a sin in the market. You will be punished. It's so brutal. Anyway, I don't know where I was at here, but we had this big low into 2022, and then we had another 3-wave push through here. A, B, and C, and there was a lot of MOAS hype here. Oh, yes, there was. Everyone was telling me, Cap, you're wrong. Price isn't going to go down. And I say that because I started forecasting bearishly back here when price was up. Like at $40. Now it's like $400. And at that time, I was forecasting a $7 price target. Everyone laughed at me. Sure enough, price fell well beyond there eventually. Yeah, I think Rhino put it best in the Discord. He's like, everyone dodged Cap, but Cap was right. And it's like, yeah, that's the way it goes. This is some powerful analysis. It's not like I'm a rocket scientist. I just actually read a book. I didn't trust the internet. Here I am on the internet, right? I know to you, I'm the internet, but whatever. That's why I encourage people to do this for yourself, right? You need to study for yourself and have your own personal experience and your own studies, because if you just follow people online, you're going to end up, it's very possible, it's very likely that you're going to follow someone who's just out there to like totally fleece you or pump the markets or who knows what. And so I really encourage everyone, buy the books that I have and read them. Thomas Bulkowski has a website, thepatternsite.com. It's a fantastic resource. Go there, thepatternsite.com. Also, there's a book called The Elliott Wave Principle by Frost and Pretcher. It's kind of like, it's based on a book that Elliott published called, I believe it was Wave Principle. I can't remember exactly what it was, but it's not like the original Elliott Wave book. And what Frost and Pretcher do is they add upon that analysis. And one of those additions to that study that Elliott did are these leading and ending diagonal triangle patterns, which are the rising and falling wedges, which are probably the most misunderstood chart patterns ever. I forecast rising wedges that are bullish all the time and falling wedges that are bearish all the time, okay? And it happens out that way. And you got to understand these principles of motive, reactionary, and all of these other kind of Elliott Wave speak things. Anyway, so we had this push down after this flat. And this was a brutal push down, and this is where I exited the rest of my position. I took a lot of profits up here. I took a lot of profits here, and then I was pretty much done. And I haven't been trading AMC since. You can see the cluster of drawings from earlier. Yeah, TD Ameritrade doesn't move your chart drawings up for you, so they just get like left down there. So those are kind of like now a relic of the past, and hopefully we don't ever have to go back into those price ranges. Jeez, that'd be terrifying, right? Anyway, so we had a big push down. We formed this triangle. Well, guess what? This makes a nice wave 4 of 5, and recently we've gotten that final push 1, 2, 3, 4, and 5 of 5. And here I'm showing that at the intermediate degree. Now, typically, we see the RSI lining up with Elliott Wave counts in just a fantastic way. If you're not using Elliott Wave analysis on the RSI, then I'm just going to say it, you're using the RSI wrong. Like, personally, I don't see it. Like, the correlation is so strong. It's just so strong. You can see that here at the bottom of C, we have the RSI reaching oversold. At the end of motive trends, you're going to see the RSI reach an extreme a couple of different times. In a corrective wave, you're only going to see it probably once. And so here you can see we found the end of our 4 wave here at the oversold. The overthrow E marking the actual top at overbought. So this swing right here was very, very important. This was the last corrective swing in this overall corrective pattern. Now we have a big push down, and the RSI, of course, is dipping deeply back into oversold on the daily time frame and on massive volume. This is the most volume we've seen on a consistent basis for a very, very long time. You can even just see back here. The only time we've had more is when the hype was at its max way back when. Since then, we've lost a lot of YouTubers. We've lost a lot of influencers pumping the stock, which to me personally is not a bad thing. It's really not. Man, I got caught up in all that too, and that's why I started following the meme stocks. That's why I started trading equities. Like, I already had a brokerage account, and I was already like investing money, but it was when the meme stock phase really got into its boom that I started paying more attention and started learning and studying, and I started the channel too. And since then, I have built a community, and it's been tremendously rewarding. It really has been. I really deeply appreciate everyone's viewership and participation in the Discord. It's been a great time, and I'm here to stay now, despite what I think of the equities markets. I'm not super optimistic on the markets. I think that the equities markets aren't for your, I don't know, working class citizen. It's not. To me, it seems like it's really a way to gain wealth, and I won't go into it. I'm kind of like just here because it's here, and I think I can make money doing it. So why wouldn't I do it? Anyway, so the analysis is that we've gone through this fifth wave here of that 5 in the 3-3-5 pattern. So our combination 3 is essentially complete at this point. We're going to be watching this fifth wave develop and unfold. We'll see how far it goes. It just depends if AMC can actually start to make a profit. That's what the company needs, is money. When shares are diluted, that will help, but it will only buy time. What we're going to need to see is a meaningful fundamental turn in AMC's balance sheet. It's about the balance sheet. It's not about short interest. It's not about they have to close. Those are myths. When the company posts a profit, the stock will eventually set a bottom. And when short sellers see that the price has set a bottom, then there will be incentive to close the short position. But as long as AMC is in an existential crisis, just like Adam Aron says, then I think personally that the short sellers will hold. It's costing them so much to hold, though. You don't know that. You know, like the data that is available is broad, it's general, and it's ambiguous. It's poorly reported, okay? There's not enough evidence to substantiate the claims that we're seeing online, and that's been my belief the whole time. And this is why I lean on the analysis. It doesn't matter if this is predatory short selling. It doesn't matter if this is apes losing patience and selling, panic selling. It doesn't matter. When the price moves, it's moved by all contributing factors, all of it. It's not a matter of what data is being omitted. It's not a matter of who's doing what. It doesn't matter what the intention is. If the shares are being sold into the market, the price will reflect that. And so if you look at the final data point, the price, and use that for forecasting, it will be the most accurate way to understand what price is doing. After all, I've been forecasting these downtrends in AMC for years now with an astounding amount of accuracy here. Anyway, I'll get off my soapbox. Okay, I'm done. Anyway, that's a lot about how I feel about AMC, and it's a vlog after all, so I'm gonna tell you how I feel and what my beliefs are. Again, remember, I'm not here trading AMC at all. I'm just opinionating, and I think that's where I want to leave it here. This will just be an AMC video, really. I'll make another video right now, and I'll go over my other trades and SPY and stuff, and what I see going on there. I've got a lot to say today, I guess. Just feeling in the mood. Feeling in the mood! Subscribe. Happy trading.